Joining me now with more in the retail space is RJ Hottovy, Head of Analytical Research at Placer AI. Thanks for joining us, RJ.
Yeah, thanks, Trinity.
Now, last week, your firm penned a blog titled Home Improvement Segments Show Stability. What are the key takeaways here, and how do they compare to market expectations overall?
Yeah, I think the key takeaways here are that it's still a very challenging environment for home improvement retailers. We're still in a period of subdued demand coming off the pandemic. We saw the big pull forward in demand where a lot of people upgraded their homes, home offices, things like that. We haven't quite hit that replacement cycle, but we're hoping in 2025 that we might start to see that. We're also a little bit slower when it comes to big, large-scale remodeling projects, which Home Depot alluded to. That's still being a weak environment for that. Some of that is interest rate driven. Some of that is other discretionary headwinds. So that's still a tough environment. That being said, we are in a period where I think we might start to see improved momentum in demand for home improvement products this year. Both companies are lapping pretty easy comparisons. And with the fourth quarter numbers coming in a bit better than expected, at least on the comp side, maybe set the stage for some outperformance in the year ahead.
And with this in mind, how is consumer behavior shifting in the home improvement sector, and what impact is it having on Home Depot's foot traffic and sales?
Yeah, it's still a category, again, a lot of discretionary categories. We've seen year-over-year visitation trends down. Consumers are being more frugal, more discretionary with their spending. And so it's kind of a situation where, what buckets are we going to put it into? We did see a little bit of rebound from home furnishing and apparel to end the year. So maybe there is some momentum in those categories. Maybe home improvement starts to pick that up as well. But it is a tough consumer environment. Generally speaking, January trends were okay. February so far has been a mixed bag in terms of overall visitation trends. So it's going to be interesting to watch. I think that there is some hope for improved demand in home improvement demand as we go throughout the year. Largely, really because people are using their houses differently. There's a lot more wear and tear with people working from home and hybrid work models. I think that could set the stage for increased demand as we go throughout the year.
What would you say is driving the year-over-year decline in foot traffic at Home Depot and Lowe's? Macroeconomic factors or company-specific challenges? What do you think?
It's more macro to me than anything else. I think it's a situation where just consumers right now are prioritizing other areas of spend. Home is important, but not the top of the list right now. I would say that that's more macro related. On the company-specific side, I think both companies are doing a pretty good job. I think actually Lowe's could be an interesting name to watch just in terms of appliances. They have a bigger appliance mix than Home Depot does. We have started to see some home products, not home improvement, but home furnishing and appliances start to pick up a bit. So that might offer a little bit of an upside potential for that company as well. Home Depot, again, the question on there, again, that would suggest it's more macro related. They skew more towards that large format remodel pro customer. And that is where we have seen a bit of weakness when we look at our repeat visitor data, which tends to correlate more directly with a pro customer.
So how would you say that home improvement retailers can sustain engagement beyond peak promotional periods?
Yeah, it's a great question, and it's something I think that they're looking to do. And visit frequency is the key for any retailer. I think there's a few things that they're doing. I think some of the service offerings. I think that is a great way to engage with consumers. I think that that's continued to be a way that they can do that. I think some of the loyalty programs and some of the ways they've built out their apps are another great way to keep that consumer coming back. Engage with them when they get to the home and start that project. So I do think that home improvement retailers do have a couple ways that they can better engage with consumers, and hopefully that'll drive repeat visits as we go throughout the year here.
And with home sales at record lows, is 2025 likely to be a recovery year for Home Depot and Lowe's?
I would say it's more of a bridge year. 2024 being a somewhat challenging year for these companies. I think we'll start to see improvement for some of the reasons we talked about. The idea that there is more wear and tear in people's houses. I think people are going to need to make some upgrades. I think we have started to see a little bit of movement in home turnover, certainly among younger families, millennial and Gen Z families. I think that'll help to spur a bit of demand. I don't think this is going to be a blowout year, but I do think this is a year where we start to see some improvement and some signs of better demand and better engagement with consumers for the overall home improvement retail space.
Now, Black Friday, Mother's Day, and Memorial Day all drove major traffic at these stores. But do you think that promotions will become even more crucial for retailers moving forward?
Yeah, I think we're going to remain in a promotional environment. I think that's certainly going to be the case. And we have seen that holidays have been a major catalyst for driving visits. They always have been, but even more so in the post-pandemic period. Really, consumers have been somewhat, more discretionary about spending in between holiday periods. They've shown they're willing to visit stores and embrace the retailers during those holiday promotional periods. So I wouldn't be surprised to see more kind of in between holiday or kind of company specific promotional events help to drive visitation trends. I think that could certainly be a trend that we see throughout this year.
Do you think that mortgage rates or shifting home improvement spending from homeowners to renters? How does this impact product demand?
Yeah, I think that we have seen a bit of that, and that shows up a bit with the large project remodeling, demand being a bit weaker. We have seen, looking at our visitation data based on where people are visiting from, that does skew more towards renters than it does homeowners right now. So that's kind of a nice situation because I do think a lot of renters are at this point looking probably to upgrade their places as well. So I think this is a situation probably doesn't drive as much as homeowners, but it's certainly a positive as we kind of wait for potentially interest rates to come down in the year ahead. I think that could be an interesting catalyst and something to keep an eye on as another potential upside catalyst for both of these names.
Are there any specialty retailers and e-commerce platforms that are affecting Home Depot and Lowe's specifically, or are there any emerging competitors to watch out for?
Yeah, it's a great question. And one of the things that we have seen is that consumers have migrated away from a lot of urban to more suburban and even in some cases rural markets. That was what our migration data is telling us. And as a result, we're starting to see some of the smaller box home improvement retailers. So that might be an Ace Hardware, that might be a Harbor Freight, doing very well. And just because consumers have moved to their market, in a lot of cases, it's a higher household income consumer that's moved to those markets. So I think that's a situation that you have to keep an eye out. The big box home improvement retailers are seeing more and more competition from small box home improvement retailers, both on the public and private side. The other name to keep an eye out here too is a name like Tractor Supply, which has done very well. That's another name that's taken visitation share from these home improvement retailers. And again, that's a function largely of some of these consumers moving away from urban to more suburban and rural locations. So I think that's another name to keep an eye out as a potential disruptor to the home improvement retailers.
Now, briefly, what key strategies should Home Depot and Lowe's prioritize the rest of this year to maintain market leadership?
Yeah, I really think again, kind of focusing on the small ticket remodeling projects. I think that's going to be a focus. People may not, go all in for that full scale remodel, but they do want to upgrade their home. And so I think some of the focus on maybe the smaller remodeling projects and some of the home improvement projects to go along with that, I think is going to be key. As we talked about, I think the idea of going after certain holidays. Spring has always been a very big promotional period or a big visitation period for these home improvement retailers. I think there's a lot of things they can do creatively around the springtime period to get people back in the stores. So I think there are some opportunities, especially off of easy comparisons. I think that sets the stage for potentially a better year in 2025 compared to 2020 for a lot of these retailers.
RJ Hottovy, head of analytical research at Placer AI. Thank you for joining us.
Thank you.